Good morning, everyone, and welcome to this webinar. Thank you for making some time for us on this Wednesday morning. We've had a number of TreasuryONE webinars that have obviously been, promoted through Ghostmail. This one's quite different. So if you've come here hoping to hear about the rand, dollar, or gold, or oil, this is a good time to rather go and make some coffee because this is going to be something a bit different. But if you've come here to learn about how to make your cash flow forecasting processes a whole lot more efficient and accurate, then you are certainly in the right place. I won't be doing much of the talking this morning. I'm going to leave that to the resident expert here, Peter Cronier, who's going to obviously talk you through this TreasuryONE service offering. And I think the important point here is, TreasuryONE is so much more than just a market risk business. I think that's what most readers of Ghostmail and people in the market certainly know them for. But the service offering does go beyond that. So, Peter, over to you. And then for those who have some questions, just type them as we go, and we'll deal with them right at the end.
Thanks for the quick intro, Ghost, and good morning to everybody attending. Thank you for taking the time to join us so early. I'm just going to share my screen quickly, and then we can just jump into the slides as well. Just checking it comes up. So yeah, because as you said, we're all here today to discuss cash flow forecasting and to ultimately try and replace, those monster spreadsheets that we all become accustomed to and, using on a daily basis. So I thought, today I might need to do a quick introduction to TreasuryONE, spend maybe a second or two on that, whereafter, we'll jump into general cash flow forecasting challenges. We've tried to summarize them a bit. And then I'm going to take you on the TreasuryONE journey that we've come across the past few years and what we've also implemented for clients. And we ultimately ended up with a dedicated cash flow forecasting tool that's ultimately saving us some time to get through the process. So as Ghost rightly said at the start, TreasuryONE is more than a market risk management business. We've been around for the past 23 years. From an FX perspective, we've done 330 billion rands worth of FX last year. But more importantly, the other side of the business as well. We've done 80 plus treasury management implementations. But then also, from my perspective, the cash and liquidity side, we've got 30 billion rands worth of money market investments on behalf of clients. And we consume 8,000 bank statements on a daily basis that the team works through and goes on. So that's quite a number to work through. So jumping into the cash flow forecasting challenges that we deal with, and I try to keep it quite brief because everybody's challenges are unique to them. So these are the highlighted items. Starting at the top, accuracy. We always try and reach for that 100% accurate number, but let's be honest, it's never going to be perfect. And I think it's one of the problems that everybody in finance has, is that whenever we're doing putting out numbers, whether it's to business or to market, that we really want them to be accurate. But forecasting is just one of those items that you need to be comfortable with the fact that it's going to be off a little bit. Talking about manual and control, I'm going to combine the two. Everybody's used to, as I said at the start, Excel. We've got manual templates that are floating around, and it's difficult to keep track of the forecasting process, and that's where the control side comes in. Who submitted, who hasn't submitted, are we going to meet the deadline, did somebody change or add line items that's going to make my manual consolidation later a bit difficult. And then that all flows into the analysis side that we all would like to do, but because all of these other items take up so much time, we ultimately just end up sending out a consolidated number. If we're doing an analysis, you'll be measuring it back to the actual closing balance, and then trying to understand where those variances come from ultimately. So from a TreasuryONE perspective, and the journey that we've taken, basically the past 10 years in terms of cash flow forecasting and running it as a service for clients. So believe it or not, we also started with Excel templates. So we assisted clients setting up models, sending them out on a monthly basis, and then ultimately collating those templates, running the process, consolidating the information that we received back. Where we spent a lot of time was around the quality control, those checks and balances, making sure that your starting position is correct, that ties back to your opening bank balances, but then making sure that you've got a zero intercompany position, all those flows should net out across the day. And then we ended up with sending out reports similar to the rest of you guys, where we consolidated the forecast manually and then did basic variance analysis. Again, as I said, comparing it back to the bank balance, but then ultimately relying on the clients to do their own analysis because we just ran out of time. So I'm referring to time, so just to give you guys some perspective in terms of how long this process, it takes. When we ran the manual process, there's 4 clients, and these are multinational JSE listed corporates that we run the process for. And we were limited to a process of, we had 7 business days after close of month end to get these forecasts, process sorted. And I ran a team of 6 individuals to run all of that. And this all equated to 336 hours, in total, that if I take all of the 6 team members and the time that we spent on that, which was, it's not sustainable. We had guys running around and trying to tie up numbers, which was difficult. So these challenges, it posed the question, from a TreasuryONE perspective, what is it that we wanted to solve? And we had to find a solution. And as I said at the start, we're a treasury technology business as well. So it had to be a tool that, would ease the burden of, collating the multiple forecasts. The look and feel had to be like Excel, and I'll lean more towards that on the next slides as well. And you'll also see it when we go through the quick demo. But then importantly, the audit trail and controls is important from a process perspective. And we had to reduce the time. I think it's evident from the previous slide that we spent way too much time on forecasting. And then we wanted real-time forecasting capabilities, which leads to actual scenario planning. But then also, if there is changes, it should reflect immediately and it should be visible. So this has led us to the tool, and we ran through a process of, it took me about 1.5 years of investigating, trying out different tools, talking to different vendors, to lead to ultimately the tool that's going to allow us to make a confident cash management decisions. But it has to be based and supported by, a robust forecasting process and accountability at its core, right? Because ultimately, the numbers that you'll be reporting is, you're reliant on different individuals across the entire business to get that information coming through. So to tick all of the right boxes and to lead to this, we ended up with a tool that we use as CashAnalytics. It's a great team based in Ireland that developed the tool. It's a specific and bespoke cash flow forecasting tool, and that they summarize the areas quite nicely for us. In terms of, they focus on saving time, giving you the visibility, and ultimately helping you with the performance, which is going to lead to the accuracy, getting to that. So I mentioned I'm going to talk about time savings on this slide. And TreasuryONE, as a business, we've saved 70% of the time that we spent previously on our manual process just by running it through this tool, which is a massive saving. So now I've got team members that's collating information, but they're spending a lot more time on getting the performance right, which leads to the actual versus forecast, forecast versus forecast, and performing those detailed trend analysis, getting through. But the visibility side is also important because the tool allows for ERP and treasury management system integration as well. So I'm extracting information from other systems, but it incorporates the human element as well. So you're able to give individuals access to the tool, and they can update specific information, and also just do a sanity check, to make sure that the information flows through correctly. That's a quick one. I'm going to jump into the tool just to get that going. So that you can all just have a feel for what it is that we're viewing. It should come up. I'm sure you can all see it. So as you can see, I'm in Google Chrome. So it's a fully multi-tenant SaaS solution. And each individual user will have the specific login credentials, which is set, and it comes into the control side as well. So each individual will have direct access to a specific entity, or you can limit it to line item entries as well. So your landing page, as we can see here, it's a nice dashboard. It gives you that visibility that I was referring to earlier. Basically, at the top, it incorporates your bank account balances. So from the treasury management system that we use, we're passing on daily that 8,000 bank statements that we receive. It's incorporated into the system, and those items are also, each transaction is mapped to a specific line item, so which helps with that actual versus forecast analysis. It breaks it down into that lowest level of detail so that you're able to improve the accuracy. So just as a highlight, this just predict these items. You can slice and dice just to see what you're looking at. We've got the projected closing bank balance towards the 31 of March. Just ignore the years that we're looking at. The dates and the information it's fairly accurate. It gives you a visual presentation of your previous forecast compared to the latest forecast. So we kept the previous one quite linear, but adjusted some of it. So the first section immediately shows you where it takes the current forecast and it measures the actuals as well for the period that we're running across, as from 1 Jan to date, and then it converts it into a forecast going forward as well. So on these, visually, you can immediately pick up that, why is there a massive variance? And you literally scroll down and you can answer your questions quite easily. So what the system will do, it will just show you your largest movements per entity, also line item basis, but then specifically the period as well. We've got entity A, debtor receipts, had a movement of 79 million in week 27 of the forecast. But then if you want to look at the forecast versus actual perspective as well, you've got creditors, debtors, you've got all the detail just to go and answer that question of why, there's been a movement per se. If we scroll down further, we've got a mix. This looks at your bank cash balances that we're passing on. So it just gives you a mix between what's rand, what's dollars, and who's sitting with what bank balance, which entity across the value. So if I jump into the tool, I just want to quickly get to this stage. If we go further, and I want to get into the nuts and bolts behind it, and importantly, start off with the setup. I think it's one of the items that we battled with a manual process as well. Is how many levels of consolidations and roll-ups do you want? But CashAnalytics makes it quite easy because we can have a different setup. You can have a one-to-one relationship, or we can have the different clusters in between as well that it rolls up. So, and this organizational chart can be exported. You can slice and dice it, change it. It's literally a click of the button of changing it, and you've got a different view, of what you would like to see. So getting into the detail, if we go to our forecast station, gets to the control side and also a little bit of the time saving perspective as well. So immediately you'll be able to see on your latest forecast that's available is, the status, what's in progress, who's completed it, who's still outstanding, and who has already submitted. But then it also keeps track of, it's got a full audit trail. So whoever logged on at what time and who changed what, it keeps track of all of those items as well. So I mentioned about the look and feel. You can also forecast in different currencies. So if you've got different templates for different entities, we can set that up as well. But you was referring to the look and feel of it being Excel. You've got your standard rows, you've got your columns. The template's fully customizable, so you can decide, what's the line items that you prefer from that perspective. It's broken down into different sections. You can also define the time buckets that you want to look on. So this specific example is set up in weekly time buckets, but it can be a mixture of daily, weekly, and then the monthly, and then the period also doesn't matter. You can go out to have your standard 13-week rolling forecast, or you can run it up to a year or 2 years, depending on how far out you want to go. It's got no limitations in terms of that. But what it does is, I mentioned the bank statements that we pass on. So it immediately keeps track of, every day we pass on the bank statements, and the system, based on rules we set up, allocates certain transactions to your forecasting line items. So, it's going to pick up your debtors, it's going to pick up your creditors, payroll, FX, if you've got FX, etc., and allocate those in your actuals portion, which will form your starting point for your forecast. So you can see, we're closing overdrawn and we're starting it. So this puts your mind at ease in a sense that your starting point is always correct, because it's based on the actual bank statements and the actual account balances that you've got for each entity. So you don't have the risk of somebody just missing a zero when they, inputting their data on a manual sheet as well. To get through it, an exciting bit, I mentioned scenario analysis. So we all remember COVID, and if you were particular retailers, you guys had to run through, and level 5, doors were closed, and everybody was wondering about what's going to happen to our cash position. So the system takes care of that scenario analysis. So on the debt receipts, I'm just going to quickly, double click on this, and just to allow you to see. So we've run some various changes. We've got weekly buckets that you can up and down and change. But if I was to say that, we're going to go to zero in the next day, and then that's also going to be zero. But then hopefully it's going to come in towards the end of the year, right? And we recalculate it. It will post it with minor differences there, and we save it there. Sorry guys, I just that, it's going to allow us just to bring up the movement and save it as well. So it will bring up the projected forecast and update those levels that we go through. Another important side that we've picked up with the manual process, that's always difficult just to balance out, is when it comes to intercompany flows, right? So the system ensures that you always zero it out when you consolidate across the flows. So you've got a specific intercompany module. See if I double click on it and I want to add a new intercompany flow, it's fairly easy. You've got it predefined, so you keep track of the intercompany accounts that you've got set up. So we can it's going to take you to the week. Select the entity. So we're currently in entity A that we've got, and the counterpart is entity F. You can just select the various currencies. That's going to be based on the forecast amount that you've got. Just put in the number there, and we save it. And as soon as we save it, it creates the counter entry on entity F's forecast as well. Let's see if I just close this view quickly. You'll see it's inputted the 5 million on entity A. If I go to entity F, you can see it was last updated by myself. And you can just view it. Do it quickly. I miss it now. And we've got the 5 million that's pulling through on that side as well. Okay, so it keeps track of the intercompany. So you're always in zero. You're not going to end up with an instance where you've consolidated everything, you've got a massive hole in your forecast, and you battling to understand why is there this massive variance. So inputting data, as I said, it's fairly easy. Look and feel it's Excel. Where you've got integration with systems, a treasury management system or an ERP, you can export and import that information, or have a direct connection. So you can pull through your creditor flows, for the different periods. You can pull through your payroll numbers. If you've got TMS, the FX flows that comes through, and that will all be pre-populated, and then somebody is still able to enter information manually. So if you want to adjust numbers, you can drag and drop, copy and paste, and then more complete as well. So it's really easy to use, and ultimately you want to push this down into the business, get it as far and close to the action as possible. So a debtors or creditors clerk will be updating their information, because they'll be working with the numbers on a daily basis to get that going. Another important bit, and where the time saving portion comes in, if I'm going to jump to the reporting side just for sake of time. So we're going to consolidate it. You can slice and dice the information. You can go back to previous versions that you want to look at. Select only certain business units that you want to look at. Different conversions. So if you've got multiple currencies that you guys are forecasting, you want to convert everything to rand. So it keeps track of different rates tables that you're able to update. And then we're just going to run the report at the bottom. So immediately, as I said, we've got at a click of a button, it does the consolidation for you. Currently, it's grouped by line item. You can change this as well to say, want to see it by business unit, etc. But currently, it's by line item. Got the actuals for the period, and then the remaining forecast, for all the entities. But if you want to dive down, let's look at data receipts. We've got each entity below that to see, who's attributing which portion to that line item. And we've got the rolling total on the right-hand side as well, which makes it nice and easy to track and keep track of your balance at the bottom. So as you can see, we've got a various, no limitation in terms of line items that you can run from that perspective. And the periods also, doesn't affect it at all. Another important, and this is to get to the performance side and getting the accuracy up. If we look at the comparison side, and that I referred to earlier as your forecast versus forecast and your forecast versus actual analysis. So the first one I'm just going to do is the forecast versus actual. It's the one that we all like to see. Everything's still converted to rands. I've got a threshold that you can enter. So if we say we're only interested, please flag any variances larger than 10% that we can like to see. I've got it set to percentage. You can also just view the actual rounded amounts, but the percentages just makes it a lot easier. So as we can see at the bottom, it does you've got your forecast, it's got your actual for that specific week. Remember, I said it's set to weekly time buckets, but that's going to depend on your model. If you've got the daily, weekly, monthly setup in your model, it will follow similar suit to that. But it will use a similar conditional formatting as you'll have in Excel, right? So where we've got positive and negative variances above that 10% threshold that I said, it's going to flag them for you immediately. But you've got it now on a line item basis and not just on a closing position. So you can literally go in to see, okay, well, guys, here's a stupid example, but, rent and utilities we got wrong. And it was entity C that, didn't get their forecast right. So you can give the business units and all the contributors to your forecasting process, give them the exact areas where they're missing the mark and ultimately, approve on their forecasting as well. The system follows a similar concept when it comes to forecast versus forecast. So you can have multiple outstanding items, so it can have different submissions. We only have 2 set up here, but it keeps track of all your previous submissions. So if you submit on a bi-weekly basis every single month, it's going to keep track of each and every one of them, and you'll be able to measure those variances and movements from one forecast to the next, and then also drill down to the underlying detail to understand where's the variances coming from, and then have your business answer those questions as well. I think another advantage of the system and from a control perspective is with each user having their own specific access, everybody's got used to the functionality of the tool, but obviously access is limited to what they're allowed to see. So the financial manager that's approving the forecast before it goes to head office has got these tools that he can use and quickly run through these checks and balances before actually submitting it up to head office to say it's correct. So there's no reliance on head office to supply the business with forecast reports and those items. And for those that still want to get everything in Excel, it might be used in a next model as well. Everything is downloadable and extractable in Excel as well. So literally downloaded. It's just generating. It's got quite a few data information that we've got going there, and then it opens as well from that side. Okay. And that brings me, that's going to bring me to the end of a quick demo. So all I wanted to show guys is that it's from a process perspective, it keeps track of the entire process. The look and feel from a template perspective is fully customizable, but it's Excel driven. It's easy for end users to understand. It's something familiar, so it's not going to be difficult for them to populate. It integrates with systems, so you can extract information directly from systems, and then have a human also just do the sanity check. And then when it comes to reporting and consolidating, it's all done at a click of a button, and you've got the information available to run those variance analysis, but then also share those consolidated reports and numbers. But ultimately, it gives you the visibility, right? You've got access to the dashboard, gives you a nice graphical representation of where we're heading, and quick and easy ways to identify what's causing the biggest variances and those items that we need to investigate from that perspective.
Peter, thanks so much. I think it's always brave to do a live demo of any system, and I'm glad it worked well. I've seen versions of that not go so well in my life, but I mean, the system obviously works and you're clearly familiar with it. So thanks everyone for sticking around for that. Send through your questions. In the meantime, one thing I would like to understand, is this system for all businesses? How complicated does a group really need to be to justify this based on your sort of standard client base?
Yeah, I think that's the first question that we get from a multitude of clients. I think it's where the system comes into its own. We could see with the flexibility and the readiness of reports and consolidating information. It really comes into its own with if you've got a complex structure. But when I say complex, you have a few divisions or subsidiaries across the group. You've got spreadsheets flying around, so it has to be fairly complex. But you need to at least be spending some time on it that will justify the cost. It's ultimately the system is not for free, and it has to make business sense as well. So I think if you've got a fairly complex structure, a large multinational corporate, that's where it really comes into its own. But we're also running, and I've got a few clients that have fairly standard structure, straightforward, not let's say 10, 12 line items at most. But they're more interested in getting the accuracy up and diving down into the detail of that level. So it's spread across the board, but I think from a business perspective and a financial aspect, complexity, justifies the cost.
And from an implementation perspective, practically, how do your clients need to think about this? Is it relatively easy to implement? Does it take a while? What does that process actually look like? Because new software is always a little bit of a nerve-wracking moment for anyone in a corporate.
Yeah, no, it's fortunately it's one of those systems where you don't need to rely heavily on IT from your perspective. My team's very well versed in implementing a system, and on average it takes us about 6 weeks to get it up and running. And when I say 6 weeks, that's from start to finish, in the sense that we set up the template, get your bank statements coming through. Visibility is an important part of the system, because it gives you that ability to obviously measure against your actuals, but mapping those transactions to your line items, that's where the bulk of the time goes into. But my team takes care of all of that. So part of the solution is that you've got access to a team that does the setup, that runs the process on a monthly or bi-weekly basis, depending on what your procedures are in terms of submitting forecasts. But it's, like I said, 6 weeks. It's a fairly light implementation. There's not heavily involvement from IT from your side. I think that where they'll get in touch is probably when we need to set up those connections with the ERP, or if it's the other treasury management system that we're using.
I think, Peter, last one from my side, and then just keen to see if there are any questions from the floor. Otherwise, it was a relatively short and sweet one today. You clearly did a great job in the presentation of saying what people needed to learn about this. How do you typically find that companies actually get buy-in to go and implement this service, at executive level? Like, what is the just succinctly, what does that investment case look like to justify this thing?
Yeah, I think from an investment case, it's definitely you need to look at the time, and that was from our perspective as well. That's how I got the business case approved, was just in terms of the time that it's taking and the risk that we're running when it comes to manual processes, right? That's finger faults. You're spending a multitude hours and hours on time on double checking information, trying to make sure that it's correct, because you're trying to base financial decisions off of the forecast. So it's definitely going to come down to the time that you're spending, but then also by implementing a tool like this, you're freeing up those resources that would have historically spent the time collating the information to rather be analyzing and understanding, what are the true cash flow drivers and where's the variances coming off from. So I think those play a big role in terms of, getting the business case across the line. Implementing it actually, once you've gotten the thumbs up from the powers that be, the change management is always an interesting aspect of any project. But I think you're busy empowering the individuals at a ground level to track their own performance and get their forecasting accuracy up. It's simple and easy to use. We saw it. That's why the look and feel and the similarity to Excel was important, so that it's not something brand new or unfamiliar for any user to get that
100%. So there are a couple of questions that have come through, and I was fully expecting this. And obviously, it's something you'll have to. I don't know if it's always a bespoke conversation based on the complexity of each client, but I think the question is, what does this thing cost? Can you give an approximate cost? So the one question references a company with turnover of, say, R1 billion per annum, although I suspect turnover is probably not the major driver of pricing. So I think, if you could just chat through some of the pricing options, there's clearly some interest in this thing.
Yeah, no, it's definitely turnover. Fortunately, it's not a driver. It comes down to the complexity. So I'm going to give you a broad range. In terms of rands, we've got it going, roughly from 390,000 per annum up to 750,000. But the complexity comes into the number of business units or submissions that we're going to be consuming on a monthly basis, the amount of users, etc. So those aspects all play a part, but each case is unique. So we, as I said, broad range, 390 up to 750,000 a year. That's where we found the sweet spot.
And then there's another question here: can the system integrate with Sage Pastel Desktop, or will someone have to export trial balances to get data?
It's I'm always to say, from a South African perspective, ERPs, you might have Sage X3 set up, but each implementation is a little bit different depending on the consultant that you use to set it up. So integration is possible, but we've seen with of our clients that run similar solutions, we can always export and import information. So that's always the fail-safe of the system. But first prize is to integrate and to get that going. But it depends. Again, like I said, it's going to be a case-by-case basis. But Tarina, yes, it should be
fantastic.
Possible.
I do not see any other questions. I'll give it another 10 seconds if anyone wants to throw some stuff in here. No, doesn't seem like it. I think, Peter, maybe to end off then, how do people find you? How can they contact you for more information?
Yeah. So we all, everybody is welcome to log on to our website. We've got a dedicated cash flow forecasting page that's set up. And from there's a link that you can follow just to submit the query. It comes through directly to myself. But we'll also be posting my email address and my contact details, on the chat here. So I'm available. You can give me a shout on email, or my mobile is also always available, and the link to our website.
Fantastic, Peter. I just want to say thanks from my side. I think this was really informative. I'm sure the attendees got a lot from it. Contact him if that is something that sounds interesting for your business. And to those who attended the webinar this morning, thank you so much for your time. There will be a recording, I think, available of this. We'll send it out in Ghost Mail in case you need, and on the TreasuryONE socials as well, I'm sure, in case you need to share this with someone in the business. Thank you so much, and look out for the next webinar. Cheers.
Thanks, guys. Cheers, guys.